guys, welcome back to my channel. Today is day 2 of my forex journey, and today we will be diving deeper and going back to the basics. What exactly is forex trading? So let's break it down in a way that will be easy for all of us to understand. So what is forex? Forex stands for foreign exchange. It's the global marketplace where people trade currencies like the US dollar, euro, British pound, Japanese yen, Kenyan shillings, and many other more currencies. It's actually the biggest financial market in the world, with over $6 trillion traded every day, and that's way more than the stock market or crypto market. So what does trading currencies mean? Let me give you a real life example. Let's say you live in Kenya and you travel to the United States. When you get there, you go to the currency exchange booth and trade your Kenyan shillings for the US dollars. And that's by doing that, you've already participated in the forex market. And actually, the rate that you get depends on how strong the Kenya shillings is compared to the United States dollar at that moment. If the rate changes later and you exchange your dollar back, you might end up with more or less than you started with. That's a simple version of currency fluctuation. So on currency pairs, in forex, currencies are traded in pairs. For example, there is the Euro USD, which means you are trading the Euro against the US dollar. There is the GBP JPY, which means you are trading the British pound against the Japanese yen. We have the USD JPY, which means you are trading the US dollar against the Japanese yen. So when you see a pair like Euro USD, the first currency euro, that is euro for this instance, is called the base currency, and the US dollar, which is the second currency, is called the quote currency. So if the Euro USD is 1.1000, it means 1 euro is equals to 1.10 US dollar. So how do you make money? You make profit in forex by predicting how a currency pair will move. By that I mean, when you buy, if you think the price will go up, and you sell if you think the price will go down. So an example is, let's say you buy Euro USD at 1.1000 and later it rises to 1.1200. You close the trade and make profit from the 20 pip difference, and we will talk about the pips in another video. So that is when you buy low and sell high, or you sell high and buy low. Okay, so I'll be briefly touching on these points, but as we continue learning, we will get deeper, and I hope you are all getting what I'm trying to explain today. So who are the big players in forex? The forex market is made up of big and small participants, and we will begin with the central bank, like the Federal Reserve or the European Central Bank. I'll be naming a few and giving some little examples. Number 2, there is the big bank and institutions. So I'm actually giving examples from the top ranked to the least players or the least participants in the market. So I've begun by naming the central bank, and the example is the Federal Reserve or the European Central Bank. Number 2, there is the big banks and institutions like JP Morgan, there is the Goldman. Number 3, there is the corporates, and these are they actually trade currencies for international business. Number 4, there is the hedge funds. They speculate for profits. And lastly, we have the retail traders, that is like me and you. And actually those are the participants of the forex market. Thanks to technology, regular people can now access the same market with just a smartphone and internet connection. As we had talked on earlier, I told you that if you want to participate in trading forex, one of the requirements that we will need is a smartphone and internet connection, and maybe you can also have a PC. Yeah, but a smartphone and the internet connection plus the knowledge, you're good to go. So let's now grab the knowledge, since by viewing this channel, it means that you already have the big two, that is the phone and the internet connection. So I'll give a little difference of forex and stock trading. So what is the difference? Number one, forex is open 24 hours a day, that is 5 days a week, while stock markets are only open during business hours. So you can only trade the stock market during the business hours, while forex you can trade it for any time. Any time of the day. You already have the 24 hours, but you have to be specifically trading in between the 5 days of the week, because during the weekends the markets are closed. So number two, there is the forex. Forex has higher liquidity, which means it is easier to enter and exit trades fast. Again, there is the lower capital requirement. You can start with even $50 to $100 in forex, while many stock brokers need more. So I remember I once also told you that depending on the broker that you use, you can start trading forex with even as less as $5, and you'll be good to go and you'll be able to make some little profit. No centralized exchange. Forex is traded over the counter, that is OTC, which means it's a global decentralized market. By that, let's get to why I like forex. Personally, I love forex trading because the market is open 24 hours in the 5 working days, and I can trade when it fits my schedule. Remember once I told you that I'm a stay-at-home mom, having some home chores to do and look after the young ones. I'm able to trade and make some little profit after I'm done with my chores and during my free time, and actually that has been working for me. Again, the second reason why I like forex is that it doesn't need a huge amount of money to get started. Yeah, and I think I've already said this many times now. Depending on the broker that you are using, you'll be able to open an account with at least $5, but maybe other brokers will require you to have $50, $100, but less is much, as one will be able to make profits. So the third point is that it's flexible and full of opportunities, especially when you learn to manage risks. Forex is full of opportunities. It's trade your little profit, that is, maybe let's talk about $50, and if the market allows, the market does not respect anyone, but if it allows and it's on and the day is good for you, you might double the capital or even triple the capital, depending on how the market will be favorable. But again, I said this is not a get rich quick scheme. You need to put in the work, you need to study, you need to learn. Every day we are learning. Make sure that every day you are learning and looking for new strategies that will work for you, because you are going to treat forex as a business, and by that within a short time probably will be a profitable trader. So every day is a learning opportunity. It's not just about making money, it's about developing discipline and strategy. I hope I'm clear on that. I repeat it again. every day is a learning opportunity. It's not just about making money, it's about developing discipline and strategy. I hope this gives you a clear and simple understanding of Forex. If you'd like more, comment on the questions that you have. Probably know what else you'd want to learn as you continue. So thank you so much, and let's see in the next video.